Now, earlier this morning, we spoke with the Finance Minister, Mathias Cormann, about the potential impact of the stimulus, what exactly that would look like, and whether those cash payments that people have been discussing are likely to eventuate. This is our discussion from earlier this morning. Mathias Cormann, thank you for your time. Last week you said you weren't going to engage in any kind of reckless cash splash like the Rudd-Gillard government to deal with this crisis. Is that something the government's revised now? Will we be seeing cheques in the mail to deal with the coronavirus?
We will not be pursuing a reckless Rudd-Gillard style cash splash with money spent on pink bats, putting pink bats into roofs, and money spent taking pink bats out of roofs, overpriced school halls, and indeed cheques to dead people. We most definitely will not be doing that. As I've said, and as the Prime Minister and the Treasurer have said consistently for some time now, we will be announcing a fiscal stimulus package which will focus on helping business stay in business, which will focus on keeping Australians employed, and which will provide targeted, responsible, proportionate support as appropriate, and indeed in a way that is scalable. But I can absolutely confirm there will not be an indiscriminate cash splash in the form as pursued by the Rudd-Gillard governments some years ago.
What about payments to pensioners, to people on Newstart, one-off cash payments? Is that on the cards?
Well, what I said on Friday when I was asked that particular question was that I'm not going to go through a shopping list of potential measures and provide commentary. I mean, we are considering a wide range of potential measures to support business, to support Australians to remain employed, and indeed to provide appropriate targeted support to vulnerable Australians. I mean, what form that precisely will take is still subject to final decisions, and we expect relevant announcements later in the week.
How would this compare to stimulus for the global financial crisis? This is a very different beast. If you're stimulating the economy by giving people money, if they're staying home, they're not going to be able to go out and spend it. Doesn't that just kind of make it like a Netflix subsidy?
Well, look, this is a very significant economic shock caused by an external event beyond our control. I mean, the truth of the matter is that the Australian economy was in comparatively good shape, in particular compared to other developed economies around the world. In the 12 months to the end of December 2019, growth had strengthened to 2.2%. Employment growth remained above trend, and indeed was 3 times higher than when we came into government, about twice the rate across the OECD. But we are facing a very significant public health challenge. We're facing a significant economic challenge, and we are thinking very carefully on how we can support business and Australians through this period, because we do know that on the other side there will be a strong recovery, and we want to ensure that we put Australia in the best possible position to take advantage and maximise the strength of that recovery on the other side.
So Wall Street plunged 7% overnight. It's the first 15-minute trading halt that they've been forced to do in over 2 decades. What's your message to Australian investors who'd be very concerned, including a lot of people with investments in their superannuation?
Well, our focus is on the economic fundamentals, market fundamentals. It's not unusual in the circumstances for there to be market volatility. Obviously, we don't provide market commentary on a day-to-day basis. The key here is to focus on the fundamentals, and there's no question that there will be a recovery after we have gone through what unquestionably is going to be a very challenging period. And on the other side, there will be great opportunity for Australians to get ahead.
How can you defend the structural integrity of the Australian economy at the same time you're looking at raising the debt ceiling beyond that $600 billion mark? We've got record low interest rates, which isn't giving you much wiggle room either with that debt that the government is taking on. Is this not a time to be considering a more prudent approach to the debt level?
Well, we are pursuing a prudent approach, and if we are going into this challenging period in a much stronger position as a result of the significant budget repair effort that we've undertaken over the last 6.5 years than we would have otherwise. If we had not repaired the budget mess we inherited from our predecessors, we'd be going into much weaker. We would be going into this challenging period in a much weaker position. Gross debt remains below 30%, was projected in the the half-yearly budget update to reduce by about half to less than 15% over the medium term. You know, obviously now with the economic and fiscal implications of the spread of the coronavirus, there will be adjustments to these forecasts and projections, which will be reconciled in our budget on the second Tuesday in May. But our balance sheet is in a much stronger position than it would have been if we hadn't done the hard yards over the last 6.5 years to put our budget on a stronger, more sustainable trajectory for the future. And indeed, I mean, if we hadn't returned the budget to balance in the last financial year.
Matthias Cormann, thank you for your time.
Always good to talk to you.